Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 25th of October. Starting off with the FTSE 100, which looks as though it's managed to avoid the worst case scenario, which was a move down to 71.50 for now. We've had a little bear trap, two-day bear trap from below the September support at 73.70. Above that, looking for the 50-day moving average, 7,500 as the initial target, but don't want to get too excited just yet in terms of any rebound. On to the DAX, which was also in the wars of late. Here you can see that we still haven't managed to get back above the gap down that we had last week, around 15,000. We need to see an end-of-day close back above that to bring in the idea that we've rebounded off the recent lows in a meaningful way. You could say that that May support line there is at a slightly different angle, but still above the, or rather below the 15,000 zone, looking as though it's under pressure. Can't rule out a retest of March support towards 14,500. The Dow was also trying to find support earlier in the week, and here you can see that it's managed to bounce off that uptrend line that's been in place since basically this time last year, and looking for that to hold near the 33,000 level. Above that, we've got the chance of a rebound back to the 200-day moving average at 33,800, but at this stage, again, not really counting on much more than that. The star of the show at the moment is Bitcoin by quite some distance, and here we're still hanging around the old target, 34,000, which seemed very ambitious even just a few days ago, even last week. The view now is that above the 32,500 area, the old July peak, we could still make further progress to the upside, even though this market is very overbought. But if we can clear the 34,000 area, the next target up would be as high as 43,000, which is a resistance line projection from back in October last year. But the key here is staying above 32.5. Moving on to the stocks, where the cupboard is still relatively bare, but not surprising given that we're in a rather horrific bear market. But I've got a bear trap gap reversal with African Pioneer back above the old December support there, 1.8 pence above that. We're looking for the shares to fill the gap up towards the 2.75 pence area, and ideally up to 3.4 pence maybe by as soon as the end of next month, although that does feel a little bit optimistic at the moment in terms of the time frame. Armadale Capital is next, and here after the rebound off that broadening triangle from the end of July, we found resistance around the 0.67 pence level, looking for an end-of-day close above that, and looking for sustained price action back above the 50-day moving average at 0.77. We haven't been properly above the 50-day line since back in March. Best case is we're up to 1.1 pence by the end of next month if we can clear 0.67 quickly. We're backed by a bullish divergence line there, so the low lows for October in the price window, but higher RSI, so that may help give the shares an extra leg. Monte Barbara, which had two announcements in consecutive days. Here, sort of a mild rebound off that support line there from back in March. Bullish divergence, so that gives us the hope that there is some accumulation happening here at the lower levels, at or just below 2.5 pence. Best case at the moment is we get up to 3.25 pence over the next 4 to 6 weeks, and even that would be quite a result given the price trajectory of the recent past. I looked at Ethernity a while back as a potential rebound within a falling broadening triangle, and that rebound happened with the bullish divergence there around the 0.25, 0.3 pence level. We've managed to break through the top of that triangle now at 0.87, and above that looking for as much as 2 pence by the end of next month. Be interesting to see what does that, what causes the shares to hit that level over the near term if we get that. Slight interest here in terms of the bullishness of the East Imperial. Here we've got third attempt for the shares to try and clear the 3 pence area. Above 3 we're looking for 4 pence, which is a December resistance line projection, and ideally now we stay above the 2.5 pence zone, which is yesterday's support, and preferably at least above the 50-day moving average at 2.2 pence, above the 50-day line, which is rising, looking for 4 pence ultimately, and hopefully as soon as the end of next month. Looks like Empire Metals is back. We've gapped up off the floor of this rising trend channel, which has been in place since back in March. If you're fussy, you probably want to see the shares above recent resistance, 4.3 pence, but that gap today, bear trap gap reversal, could be the first signal that we're going to turn around and visit the highs seen back in August, maybe by the end of next month. Don't normally look at the next stock, but IG Design, I think they had an RNS today, and bear trap gap reversal as well from below the July support there at £1.20. Above that, we're looking for as much as £1.55 or £1.56 at the top of that triangle from back in July. Ideally, we get back above the 50-day line at £1.33 sometime later this week. One of the few stars of the recent past has been quantum blockchain, and it's hit all our targets, especially the 2.4 pence one, which was the old 2023 peak, and then up to the purple line there, 3.2 pence. In fact, we overshot that, which is always pleasant. The current situation is that we're looking for a retest of the old late 2021 resistance as high as 4 pence. Maybe we could see that by the end of next month if we stay above the 2.5 pence zone. Onto online blockchain, where it's all about AI, and it seems to inspire the market. Gap higher yesterday, bear trap gap reversal from below the May support there, 11.6 pence. Above that, looking for 20 pence by the end of next month at the top of a broadening triangle in place since April. The key here is staying above the latest gap and the 11 pence level. That would be the ideal scenario. We're also backed by bullish divergence, so a lower low for the latter part of October, but higher RSI trace. So a bona fide turnaround situation there. Optibiotics has been one of the stars of the post-summer period, and it seems to be ready to deliver more for the bulls over the near term. We've broken neckline resistance, gapped up to start the week as well, so above 30 pence. The target there as high as 45 pence at the top of that rising trend channel from July looks to be on the cards, hopefully by the end of next month or even sooner. The China graphite news has helped the graphite plays, including Tirupati, which I'll look at in a minute, but it's also helped Sovereign Metals, which is a big graphite play as well. Here you can see that there was a bear trap below 21 pence, basically at the end of last week. That looks like it was the final flush out of the weak hands, and we could hopefully now see the top of that falling trend channel in place since the beginning of the year at 29 pence by the end of next month, and maybe a bit sooner than that. Shares have rather underperformed, even though the fundamentals there seem to be getting stronger by the day. On to Tirupati, and here you can see that bounced off the 50-day line today, which is good news. That was old neckline resistance as well, so above 19, looking for up to 28 or 29 pence by the end of next month. That would also tie in with the 200-day moving average. We haven't been above that properly since back in June, but nice to have that support area at the 50-day line in place today, as well as the uptrend line in the RSI window. So that's bullish divergence with a bear trap gap reversal to start the week, so looking healthy there from a technical perspective. Stock which may be ready to recover as well is Xtract, where we've broken out of this falling wedge, which has been in place since July. 1.2 pence the resistance line there, and above that we're looking for up to 1 3/4 pence by the end of next month, which would take the shares back to where they were in July. So let's see if that pans out. Finishing off with Zanaga, and here just the signs that we're bouncing off a rising 50-day line. That's around 5.6 pence. Above that, we're looking to fill the gap down that we had earlier in the month, up to 8 pence over the next couple of weeks. Ideally, we're back at 10 pence plus by the end of next month. That's it from me today. More updates tomorrow.